All right. Good morning, everybody. Kind of a mixed bag. They've been trying to rise back up. Dow and the S&P basically flat. Small caps down. They were down more, less than a quarter now, and the Nasdaq up not quite a quarter, moving in the right direction. We've got a lot of bits and pieces of data today. And of course, we've got Fed members chipping their teeth. One of the things on the table today is FOMC minutes. And it's odd how often this gets mixed up in new traders' heads and they think that it's FOMC day. It's not FOMC day. It's just the minutes, right? It's a completely separate entity and event. So relax. It's not FOMC day, but we are likely to see some information come out in the minutes that can shake the market, provide clues. So we could still see a little volatility. In the overnight tonight, we're likely to come in tomorrow with less trading volume. We can see these nations are closed for a holiday tonight through the overnight. Whenever you're not sure, you can always go to a website called tradinghours.com. It's free, it doesn't cost you anything, and you can see every market around the world, when they open, when they close, if they have holidays. So we're likely to feel that that lack of participation. The Richmond Manufacturing Index, the numbers are trying to improve a little bit. It's not as bad as it was, right? The minus 17 in 2024, I think it was. It's not that bad. And it's improving, moving from a minus 13 to a minus 9. If this comes in even better than minus 9, markets likely are going to appreciate that. We could see a little bump. If you notice, it doesn't register high on the impact gauge, right? It's showing as a minor value, but that doesn't mean that it can't cause volatility. So just kind of watch the clock. It's on the round number anyways on a new hour. So, it should already be ready for it. But look to see if those numbers come in a little better than expected. On a short week like this, crude gets moved around. You can see that crude is showing up on finance juice for tomorrow. And it's showing up where we were today, right? So it's very likely tomorrow, and it's very likely that FX Street is just, they didn't go in and change it, so it just happened to be there anyways. Keep track. If we get it today, then we get it today, right? I would expect that it's going to be tomorrow, and it won't be 10:30 tomorrow. It'll be noon tomorrow. It shows 11 o'clock my time, but we need to focus on market time, and that's an hour ahead of this. So tomorrow at noon, we'll get crude, supposedly. Tonight, we've got CRM and NVIDIA earnings as well, as if you didn't hear that yet, right? I don't think there's anybody left that doesn't know we've got earnings tonight. The put wall was rolled up significantly yesterday, and I went back to check because, wow, right? That's a big move. And yeah, it did roll up. but still waiting on the AM edition of the Founders Note, where in the post, they usually have this picture of all of those levels, the call wall, the put wall, everything. And so we have a little bit of a gauge of where those levels have been and where they're going. Hopefully the post is going to give us some insight here. I've read in their posts before how they'll spot a single day that has an elevated put wall or an elevated call wall, and they'll say, yeah, this is a 1-day blip on the screen. The machine defaulted to that level and labeled it as a put wall, but it's not likely to stick. Now, I don't know that that's what we're going to hear from them today. It's just I will be reading through the Founders Note looking for any info on this put wall getting moved up. It jumped the volatility trigger and 0 gamma, so everything didn't get moved up, just the put wall did. And if you look at the call wall, well, it's still right there, right? It's still in our face. So kind of want to see if this is just a 1-day blip on the screen and we're supposed to ignore it, or if that's going to be our new reality. Keep your eye on the call wall today to see if that gets moved up. And I can see that they came out with the AM edition. I'll get that shared out to you guys. You have a chance to read it now before me, I'm sure. We're still above all the moving averages on the daily. So 4, 10, 20, 50, 200, all of them. And we're above the 3-week and the 10-week. So we're just doing what we should be doing. Since we are basically flat this morning, we have no edge towards either one of the red lines, except to say that if we were going to go and hit the upper edge, we would need to break out of yesterday's high and keep it. We tried to break out already once and it didn't stick. Wouldn't surprise me if we try it again. This is all still just a run up from the recovery that we've been getting since like 5:30 this morning. It's a measure of yesterday's range in the RTH. We can also expand it all the way to yesterday's entire range, but I want to focus on just the RTH at the moment. 59.05 is the midpoint, and if we break out 59.50, which should not be a surprise, it's the options level, and then 59.60. If we break the half, then we're going to get to this ADR line. If we get through that, which also happens to be the RTH open, it looks like, or really close to it. Nope, that's not the open. Get through this ADR line, and we challenge the low of yesterday's RTH level by level. Today's floor pivot channel is really wide. A wide channel implies that if we break out, that it doesn't stick. Just keep in mind that these channels don't make us break out. And even if we do break out, it won't stop us from breaking out and come back in again, right? So these things don't control price. They just give us insight on what to expect from price. It's lined up around 5,900. I mean, it's close enough. And we haven't hit it yet. We also didn't hit yesterday's. So yesterday was an MDP. It's a missed daily pivot. And now we've got another one today. There's a strategy that goes with that. If you were just to go to YouTube and type in missed daily pivots, you'd find the guy that really made that strategy popular. Now, I don't trade the strategy myself, but it does come in handy when doing analysis. So right now we're still outside of that floor pivots channel. If we get back inside of it, we'll focus on 5911 cog line and then 5900, get that floor pivot. If we break yesterday's RTH low, which is the channel top for the week, then we'll target the weekly channel pivot point, 58.50 basically, which again shouldn't be a surprise. It's a big round number options level. If we continue this drive to the upside, we got last week's point of control, 59.63. Once we get through that, 6,000 and beyond is ours for the taking. Really nothing else up here footprint wise that we got to deal with. We weren't able to do it last time. They took a front run on that 6,000 level. We didn't make it there. So if we get through this point of control from last week and we get up above that 59.80, watch to see what sort of liquidity and tape behavior we get up in that zone to see them if they're going to be front running it again or not. This week's running more of a classic P-shaped profile, although the tail isn't really all that long. And we've got a lot of structure up across the top instead of a more uniform D shape here. The concern is that we're going to drop back through this shallow area and end up developing another range like we did last week, right? We had this zone. That's the concern here. If we drop through this shallow area and then we build this back out here. $10-day, 30-minute volume profile in TPO. TPO's in blue on the right. Volume profile is green through the major part of the screen. Point of control is still not lining up on the both of those. We're going to continue to take the volume, or I should say the trades off of this point of control as we wipe out these candles here. Then that just leaves all of these, which we won't get to until we've moved this point of control up here. It's very likely at this point the move in the point of control is going to bring it up to the cog line 59.32 area. Basically where we are right now, 59.37 is where we're at the moment. Cog line is 32. It's really close. It's a running bet between these two at the moment. None of this other structure will even be here unless we get back above this level, 59.56 from May 21st, right? That big move to the downside. That's a liquidity gap that needs to be closed. Good times. Although it's closed, isn't it? If it isn't closed, then it's really close to being closed. Oh, yeah. Not yet. Hand grenades and horseshoes. So if you want that level, it's 59.46 and 2 ticks. which lines up with the VPOC here as well. That's last Wednesday. That's the 21st that we were talking about. The same spot, right? Got to get through that level and then get into the 20th, which was the day before, that really tight range on that Tuesday. We don't have a new VPOC from yesterday because we've already come down and hit it, wiped it out. Now, the textbooks will tell you to carry it forward anyways. I've got enough pivots. I don't need another one. But if you want more structure on your intraday charts, there's nothing wrong with carrying forward the point of control of yesterday, the value area high, and the value area low. You can see the double distribution we have in today's trades. It lines up strongly on this point of control from yesterday. So as we came down into this level, we've seen a lot of that behavior, right? It's why keeping track of the point of control from the previous day has merit. It's not to say that it's support or resistance. That kind of puts my bias in it. But we can say that it's an area that had the greatest amount of trading yesterday, and it's likely to see a lot of trading again if we go back to it again today. And that's exactly what this showed. A lot of participation, especially at that time of night, at that level. All right, as we've discussed, this week's weekly expected move is not this range. Yesterday afternoon, I took a little time and drew out the levels. Let me get that shared. 59.32 on the upside, 59.11 to the downside, and 59.20.75, which was Friday's close. Let me bring this up so you guys can see it. All right, now it's on the intraday. It's on a 5-minute, but no, wait, that's not the one. That's too tight. Hold on, where's the right one? That's not it. Here we go. I was pulling that off of the other machine, the other computer. This not gonna help. This one. 59.58 and 56.72 weekly EM levels. So if we line that up with what we have right now, maybe it's close, maybe not. My concern is that this indicator does not do a good job on short weeks. That's why you want to draw them by hand, right? 59.26 and 57.04 is what it has. Now these weekly expected move levels, they offer a lot of clues, not just how far we should move on the week, but how we close in relation to them. If we end the week inside of them or outside of them, and then what's our consistency doing that? Week after week, are we closing inside, or week after week, are we closing outside? So we want to keep track of this level, see how things play out. So far, we've been failing to stay inside the levels for quite a while now. So this goes back to, if you're premium selling, you're trading out of the money calls and puts for premium plays, this tells you that that's an elevated risk threat right now, right? You're not getting paid for the risk you're taking. They're not pricing the volatility into the markets, and we're making bigger moves than what the market says we should be making. All of that just from those two little lines, huh? We're still 3.25% above the 10-week, and we're working our way back up. So we didn't get a reset back to the 10. Still shows the strength of the push, that we're not done yet. It's not tired, but it also shows we're not overbought. We're not overextended. We haven't gone too far too fast, and it doesn't owe us any sort of pullback at this point, at least not on the weekly. On the daily, we've already come down and got a reset, and we've moved back up nearly 1% away from the 10-day. Now, we got extreme a little while back, and we're nowhere near that now. So we're not overbought. It doesn't owe us any sort of pullback, and we're just maintaining a steady rhythm at this point. Good place to be. And if we look back, that's a good area, not getting too extended. But this is only the second day. We want to see, a collection of these. So we'll see how it goes from here. But this is a good spot to be, about 1% away from the 10-day. We haven't looked in a while. So the 9 sectors that we look at, top 3 risk on, bottom 3 risk off, 3 in the middle, kind of the midline. The label or the tag in the upper left of all of these charts is a 5-day bar, 5-bar change percent. Blue is positive, orange is negative. And you can see even on the 2 that are positive, it's not very positive at all. That we've got more in the negative than in the positive. Growth versus values really changed. And any sort of capital rotation has come up short. We look at this growth versus value, everything's fine. We're still in this really nice textbook bull flag pattern on a daily. And that's just classic growth versus value. And we're still holding it. Bring in this other one. This growth versus value is more centric to the hyperscalers and Mag 7 tech bullies that we got out there. But it still has this bullish push, and then we've been maintaining that level up there. Not quite the same sexy bull flag as the other one, maybe a bit of a pennant, maybe. Still elevated and holding its level. So where's the growth versus value being reflected in the charts? Because we certainly wasn't seeing it looking at the daily on the 9 sectors. Maybe we're in a transition period, right? Maybe. The 10-2 on the dailies just stalled out. It really is more pronounced on the daily, but you can see it on the weekly too. We're just really struggling here. Yesterday we had a situation that Spot Gamma calls spot up, vol up. That grind that we had yesterday where we just kept going higher and higher and higher and higher. Even though we had a lot of setups telling us that it couldn't continue or that it shouldn't continue, that we were at the next reversal and it would just keep going anyways. But it wasn't from the broader market, right? When we talk about the rising tide that lifts all boats and when we ask the question, what's moving the market today? I don't know if you guys ask yourself that question, but that's usually what I'm asking every day is why are we moving? And if we're not moving, why are we not moving? Sometimes it's 0-day trades like yesterday. Sometimes it's dollar, bond, yields, treasury, right? Or sometimes it's commodities. Or it's just a broader market where everything is going up or everything is going down. Market breadth yesterday was 95, 96, 97%. We were talking about alpha protocols yesterday morning. Sure wasn't reflected in that 5-day change chart that we were just looking at. If we look at what is up and down this morning, my benchmark is 0.5%. And we can see that China's down, Bitcoin's down, and really that's it on the downside. Flip it over. When we look at what's up, the VIX. Well, that was short and sweet. Pot stocks are up. We don't want a rally leaning on crude and pot stocks and agriculture. We need something a little more than that. Okay. We got miners. They have been, unreliable and unhelpful. Don't see how they're going to help us out today. Now, consumer discretionary is moving in the right direction. That's one of the three that we can use for a risk on day, but hard to see how it can do all the work by itself. And it's very likely just one or two names in there that's doing all the work. So if we jump over to something like TradingView and look at the stocks that are making the push, well, that's a short list. NVIDIA, but it is chips in general, right? We can see of the names that are up this morning in the NASDAQ, at least 0.5%, there's 6 names and 5 of them are semiconductors. Surprise, surprise, right? There's your consumer discretionary up this morning. And the S&P has 5 names, 3 of which are semiconductors, and then Tesla, so another name in the Mag 7 list. So we don't have the bullish push this morning from the broader market, but it's not overly negative either, right? At this point, we're neutral in the broader market. So we're not being bullied or pushed around. Of course, we don't have options yet. So we don't know if we're going to get the same kind of drive that we did yesterday until the market opens. But we're not seeing influence from treasuries, bonds. Ag is really, that's kind of a joke, right? We're not going to see ag push us around and pot stocks. It's not going to happen. So we got to get into the open, make it through a couple of these economic events, and start to define what the rest of our day is going to look like. Now, I laid it out really clear and really clean about this high or low. Fine, great, we got it, right? But now we've got this high that we have to deal with. And this is us now. This is what we have to deal with. You can do some round numbers if you want, 6,000 across the top, 5750 on the bottom, maybe even 58 if you want to tighten it up a little bit, right? Forget that big wick down day. It's a 200-point range, GTFO. We have to get out of this box. Now, it's not just for today's trading, right? It's more of the bigger picture. But as long as we're in this box, we're healthy, we're fine. We're a lot like this box when we were back here, just trading in the zone, healing, digesting, correcting in time rather than price. Not a bad thing at all. A little bit wider of a range. This was only 100 points. This one's 200 points. Still, this is a good place to be. And it's a healthy place to be. We don't want to give this up and put in a new low. It's one of the things we really want to focus on. So with that being said, something really simple is yesterday's midpoint, 58.77. We want to keep that. We don't want to give that back. Get through the auctions today. The manufacturing info at 10 o'clock, which is really, it's more important than what they're showing here because this is a historic view. And historically, we don't have tariffs at such elevated levels. So this isn't reading the current market backdrop and giving us impact projections. It's looking at the history of this thing and how many times it's ever caused volatility. Historically, that's pretty low. In the current market backdrop, this thing has the potential to move us today. So watch the clock. Everybody, be careful, be safe. I'll see y'all tomorrow.